Okay, this is very good information here. The break of the uptrend line, that's a very good information that, okay, maybe the downtrend has begun here. But notice how this can also be subjective. If I just go like this, the break of my uptrend line happened there. So my downtrend probably began from up here, right up here. Or if my trend line is like that, then my downtrend begins from somewhere here. So also a little bit subjective there, but it's somewhere in that area. Some people are saying the second purple line, which is this one here, it's like, okay, now that it's made a lower low, Boyki, this is this year, 2015. This is actually very recent markets. Okay, this is in June. Okay, so if it broke lower lows, they're like, okay, lower lows, lower highs, downtrend. So here's the concept of it. The first push that comes in is the push the big boys do. The bankers, the hedge funds, you name it, blah, blah, blah. Okay, this is when opportunity first happens and it's unknown in the market. No one sees it. Okay, no one sees it. Pulls back to a secondary push. This secondary push is like, like I tell you guys in the stories of my webinars, that this is when a few pro traders or your neighbors are doing this, right? The real estate boom, first stage, everyone, all the bigger players buy it, they make some money off of it. Second stage, some neighbors are starting to buy it and they're making money, some friends, some family. They're like, oh, okay, I want to do this too. And people step into the final stage. Okay, and this is now the 80% of the market. Same concept applies in Forex, is by this point, every single trading system and strategy, all their MAs, all their stochastics, all their MACDs, and all their indicators finally catches up, and it's like, hey, this is an uptrend, you should be buying it. Problem is, buying it from up here at these prices, you're late to the party. Because somewhere up at these prices, the market needs to crash before resuming. Have you guys noticed every time you guys even for me, every time, long time ago, I used to start getting into trade, it's like, I know it's an uptrend, but it always just crashes on me. It's as if like I have bad luck. I used to feel like that. Like, why is it every trade I get in, I lose? You ever get that feeling? It's because by the time our mental mind and the eyes grab on to the direction, it's too late. It's too late. Yeah, so same thing here, right? When you see this markets are going up and up and up, and then it blasts north really, really strong. It's around here when it blasts north really strong that everyone's like, oh, hey, it's going up. So where do all the buys happen? Right here. All the buys are started to kick in right there, like, hey, I want to buy that. But what happens? It first will go down. It'll stop out majority of the people before resuming. Okay? Because we're under this assumption that this thing's going to go on forever. Okay? So always keep track of what the stage is. Okay. So back to the flow. Yeah, Jin, that's very, very correct. Price action is always the leader. And indicators, systems, strategies, all stuff generally follow the market. Yeah, they always follow the price. Okay, so quick recap, real quick on this, is all the technical stuff, everything that we've talked about so far, Is any one thing incorrect? Okay, some of you who said this is a downtrend, are they incorrect compared to some who said this is an uptrend? No, they're both correct in this. So that's the problem with analysts. They're generally correct. Problem is when you bring it to trading based on what you're trying to trade, one is going to be incorrect. Okay? If you're trading the smaller things on a daily, then all these things up here, then this downtrend is incorrect to you. Okay? Makes sense? So it's all perspective. All right, let's clean it up. Okay. What are the 3 stages to the market? What's the stages to the market? We only have 3. What can happen in the markets? The 3 types. Up, down, sideways. Excellent. Good, good. I'm glad this is quick and fast. Okay, it's not guesswork. It's up, down, or sideways. That's it. Up, common knowledge. Higher highs, higher lows. Down, same thing, right? It's inverse. Lower low, lower highs. Okay? And then range. Range comes in all sorts of designs. Either it goes completely flat, the ones we're normally used to seeing from textbooks. That's a range, like that. Okay, this can be a range when it's squeezed like that. Okay? Anything that stops you from saying higher highs or lower lows. Okay, it doesn't make any higher highs, it doesn't make any lower lows, range. Same thing here, doesn't make any higher highs, doesn't make any lower lows, range. Okay, so the market generally tends to be in a range state if it's not in a trending state. Okay, so the 3 stages are very important to first find out what needs to be done. So, again, these states are critical to understanding what you need to do. So, for those who are looking at a slightly bigger picture, who are trading a couple times a week, this is important. For those who are more immersed into smaller scales, this can be important, that we're in some sort of a channel here. Okay, just popping up and down.